Hello, Scott.
Hey.
Thank you. Andy, hello.
Hello guys, what's going on?
All right, welcome to the Tuesday webinar, Trade of the Week edition, June 20th. Quick disclaimer as per usual, we are not brokers, we're not registered investment advisors. Anything you hear or see here today should not be construed as a financial planning or financial advice. We're a content publisher, software as a service company, and we're just here to show you some cool technology and some cool ways to use it, and hopefully answer some questions and help people that are using this very extensive deep technology make the best of it. So lawyers are happy. We are not registered investors. You got to pay somebody to manage your money to do that, and we're not doing that. So you're not alone with trade ideas. We love to spend time on the slide for the newer people. Scott mentioned there is a promo code at the end of the presentation that can be used to apply to your first month, save 15% off, and kick the tires, because it really does take a couple weeks to really feel the power and dip into all of the different nuances that Trade Ideas has to offer. But in terms of onboarding and concierge and trying to get people up to speed quickly, this is just a quick slide, starting with the live trading room. It's a free room. You do not have to be a member of Trade Ideas to join this room. Mr. Barry Anderson started this room. There's hundreds of people in there now every day watching Barry trade his own account, demonstrate the Trade Ideas technology, help people with technical support. And additionally, all these people in here are trading and calling out their trades and calling out Trade ideas, sharing Trade Ideas cloud links. So it's a great community every day of the week during live market hours. Then we have, of course, the webinars Monday through Thursday at 5 p.m. Eastern. As you see here, yesterday was Jamie and myself. Today is myself and Andy, which is not on here. Tomorrow, the Q&A demo is normally with Brad and Dan. Brad's out of town, and we do have a really good guest speaker tomorrow, so you'll be getting emails inviting you to somebody outside of Trade Ideas that wants to present some cool content to you guys tomorrow. So that'll take place of the QA webinar. And then Thursday is capped off with Andy and Jamie riding shotgun in what we call the trading studio. And then recently added, we've already had 3 weeks of this, and it's been a very well resounding support. For people who may join on Tuesday or Wednesday and they haven't quite signed up for the one-on-one sessions, which I'll get to in a second, we now have a open Friday support sessions, technical support, 11 a.m. 2 p.m. Eastern. You can come one, come all. Again, you'll find those in your emails. If you're on our webinar email list, you will be getting notification that you're welcome to just pop on in, join in, just like we are now, using the same question box, the same GoToWebinar technology platform. And then it's a real casual 3 hours of, hey, how do I do this? How do we do that? What do you think of this? Just trying to open up additional access to people who are newer. Which brings me to the last point. It's about an 8 to 10 day waiting period right now, but the one-on-one session should be something that you sign up for immediately after you subscribe for at least a month. It's free. Normally it's a $99 value. If you want to come back and do another hour, you have to pay $99. So full circle, when you consider the promo code Scott's going to give out, I think it makes your first month around $79. You're getting a lot of value to kick the tires for 30 days and a lot of support and a lot of help. And I guarantee you, you guys would realize after 30 days that you made a good decision. All right. Yep, I see a couple of people commenting on the Friday session, so getting some good backup here from people on the Friday support session. So come one, come all. It's super casual. Subscriber growth, again, I just love to keep this slide in here. It does need to be updated. We're probably up here in the corner now, but for all the reasons that I just mentioned, we are having great growth in our subscriber. Brokerage Plus is something that's going to be coming out. It's still in beta, and it's going to be available to people who have premium subscription. But for those of you who are brand new newbie traders, this is not for you. This is deep into the intermediate and advanced trading experience. It's basically a way of taking Trade Ideas alerts in real time and bridging the gap so you don't have to trade them manually. Plugging them into Interactive Brokers is who we're working with on this first round beta test. And it's coming along nicely, but at some point it's going to come out of beta and be a full production. If you want more information on that, you can email tradeideas.com/beta, and we'll route that to the right person. We're not going to talk a whole lot about this because, again, it is a very higher level advanced feature, and you really got to have a plan first. You can't put the cart before the horse. You got to first build the cart and know what it is you're looking for, and then hook it up to your broker. So more to come on this, but not for the new traders, without a doubt. All right, agenda June 20th is going to be pretty similar to what we had last week. We're going to go through the market recap and talk about what we've seen the last couple of days, the AI Holly recap and some observations, trade of the week management. I'll talk about last week X and this week ASPS. And then I want to kind of continue what we did last week. We went through the sectors, and we found a couple of interesting sectors that were looking good, and I think we want to maybe catch back up and follow up with that and stay on top again of where the charts are showing certain strength and certain setups in sectors. And I'm pretty sure we're going to have some time at the end today, so if you've got like a feature request or how do I do this, or you got a chart you might want us to look at, go ahead and sit on those questions until we invite them, because I'm pretty sure we're going to have at least 10 minutes or so to delve into that last bullet point. All right, so let's minimize the old slideshow here and go into my layout. This is my default layout. I always remind people that, you know, when you close Trade Ideas and you open Trade Ideas back up, it's looking to the default layout. So I'm always trying to get people, when they save their layouts, to just stay consistent with the factory default layout. Trust me, it makes things a lot simpler. And while I'm thinking about it, if anybody out there needs you know, a little additional comfort in their layout and not wanting to lose it, once you've got your default layout set, what I would recommend doing is going to save and share to cloud and make a complete copy. If you click entire layout, it checkboxed every box that I have open, and the alerts gave it a title of layout. I might even give this a date. We'll call it June 20. And I just created a cloud backup of my default layout. So for any reason, if my hard drive became corrupt or I overwrote it, I can now go back to the cloud and grab my default. So let's get started with, as I said, the market analysis. You know, once again, that didn't stick. I'm going to pull this back up. It didn't stick from yesterday. Crosshairs are off, which allows me to grab this trend line here and talk about the SPY, or the S&P 500 ETF. So many touches, I think about 5 or 6 touches on this ascending trend line, which is holding the S&P up. But then we get into kind of what's been going on in the last couple weeks here, and kind of reminds Andy and I, we've often referred to this in the past as chutes and ladders. A lot of green bars and then a lot of red bars, back and forth, wide bars, long bars. If you guys don't know what I'm talking about, this is the old board game that we laugh about, chutes and ladders, and sometimes the market seems to get into a dynamic where it's just one day up and the next day give its back, and wide candles. So if you didn't recall what I was referring to when I said chutes and ladders, maybe that visual will give you guys an idea of the market right here, chutes and ladders. And the same's even more so for the Qs. On the Qs, our trend line is also intact, but barely. The last week, these 2 days, Thursday and Friday, barely held on the low end of that trend line, going back pretty significantly. A lot of touches here on that trend line. So this is a very important technical line. I would recommend drawing it on your charts if you have one, because, you know, we had a nice gap up yesterday, a nice push higher, and then a complete reversal. Not quite an outside day because we didn't take out yesterday's highs on the Qs, but, you know, it's a little void right here, a little gap. There's nothing to say that there might be some backing and filling in the Qs to come back in here, but what we really need to be mindful of is the continuation of this trend line, which certainly has been holding as of late. and it also kind of corresponds with this level right here that we had, forgot what that level was. Just put a markup in it. There we go. And so we're kind of converging on this possible support level gap fill, and if it goes beyond the gap fill, the second level of support should be the trend line. But like I mentioned yesterday in Jamie's webinar, I mean, the real story is back here we were talking about technology, leadership, one bad day, and then back to leadership, technology. Well, the baton has been basically given and handed off. No longer is technology and the Qs leading the way. Matter of fact, I even mentioned yesterday.
I'm sorry. I thought you were about to move over to the diamonds, and I wanted to stay on this chart right where you had it there, because speaking of chutes and ladder, that big red down bar is one big chute, and it was on huge volume. You know, so I keep pointing this out in the webinars, because keep your eye on that, because if for any reason, you know, this ends up being a top in the market, I'm not saying it is, but you'll look back and people will scratch their head and say, why didn't we see this coming? That was huge volume. And even the green bar the next day after that was still a down day. Keep in mind, that was still a negative day. So even though it's a green bar, it was down on the day. So
people say they don't ring a bell at the top, and we're not calling it top, but volume certainly did make a an entrance here that day. And I liken this, you know, like it's like pulling a rubber band back and then boing, letting it go and seeing how it just kind of reverts back to its mean. And because of that, that's when you get the chutes and ladders type days. You know, there's just no real semblance of order or setup or consolidation. It's just a lot of back and forth and gap up and gap down and trade up and trade back. And so, I mean, we are still in a very much volatile period, 1, 2, 3, 4, 5, 6, 7 days after this giant heavy volume sell-off. And for the most part, you know, the SPYs are kind of doing it too. They're just not doing it with that one big bar that the Qs had, but a lot of back and forth here. You know, we almost filled the gap today. There's a little bit of airspace right there, but you know, it makes it difficult. You know, I hate to bring up the word difficult, but, you know, it's not exactly easy at the moment when you've got a nice bottoming tail and a nice push higher, very close to breaking out to all-time highs, and then it just throws it in reverse, back up and fill the gap. And so it's a very messy daily chart. The diamonds, however, not so much. I mentioned yesterday a new breakout to new all-time highs in the Dow, and kind of a little, well, not quite an inside day because we did take out yesterday's highs briefly today. But the diamonds, the Dow, has now got the baton of leadership. Okay, just real quickly, spiders, not so much. Qs, definitely not. IWM, a really nice 7-month sideways range, and then the Dow. So the Dow is looking the prettiest right now. And, you know, we'll get to a bit more when we start talking about different sectors. But, you know, last week we mentioned keep your eye on healthcare, XLV, as we went through that exercise yesterday in healthcare, very strong. XLI gave some back today. Interesting, the industrials, and XLF probably gave back a little bit today as well. But, you know, the baton has been passed. It's no longer technology being the big buzzword. And I think we still have some days to go before, you know, this this volatility starts to just settle down a little bit, and we start to get some more setups in the market. So
unless we break down, and then the volatility could get actually higher. So yeah, for sure.
Yep. You know, I thought the IWN might have had a chance yesterday, but it really gave it up today, pretty much with everything else, you know, which is not unusual, which is kind of normal, I should say. You know, let me go back to the Qs real quick. This one day was so amazing because the spiders didn't quite do that. They had a little bit of a hiccup here. The Dow said, screw it, I'm going to highs. And the IWM didn't really have a whole lot of reaction at all. I think it was actually moving higher. So that was a very unusual day when it was just the NASDAQ and the Qs falling out of bed on huge volume. Well, today it was a little different because it's more normal. We've got red bars across the board. So we had kind of a broad-based week day in every single index that we typically follow. So
Yeah.
keep an eye on that trend line here in the spiders.
And one other thing too, that the IWM, I mentioned in my webinar, I would just stay away. I mean, look how many head fakes it's had, from trying to break out of that range. Basically 1, 2, 3 right there, and it just cannot get anything going. It keeps falling back down in the range. It's just that's a really tough sector to have any confidence in right now. It really is.
Yeah. Typically, you'll hear a saying that's like, oh boy, even the junk stocks are going today. Well, when they say junk stocks, they usually mean low cap stocks under $5. And I had thought if this market wanted to continue higher and the Dow wanted to drag us higher and the S&Ps wanted to break out to new highs, I thought there was a very real possibility that the IWM may be dragged higher because, as I said, a lot of times late stage rallies usually kind of peter out with, all right, what can I trade now? The junk stocks are rallying. Let's get on to those. And we can't even get the IBM junk stocks to break out of their range. So a lot of mixed signals here still. And we'll keep an eye on it, but very important.
I read an article the other day where the hedge fund community has never been as long in the IWM as they are right now, which makes me think it's going lower.
Okay, so let's use a baseball analogy. Yeah. Let's use a baseball analogy. The count is 0-2, and they're gripping on the bat, and they're going to swing as hard as they can at every single pitch to try and knock the performance off. I mean, if you guys have been reading hedge funds, they're not doing that well. They can't outperform the market for the last 4 or 5 years. Connecticut real estate is beginning to implode. All the hedge fund guys just don't have the moxie that they had a few years ago. So before I leave, just this trend line on the Qs. The Qs led us up. The Qs very well could lead us down. You notice how much closer they are to that trend line than the spiders. Spiders got a lot more to go. So I think for a red cautionary flag, I'd be keeping a real close eye on the Qs and this trend line right here. Nothing to say we can't come and touch it and bounce, but what we don't want to see, the bulls don't want to see, the bears do want to see it, but what the bulls don't want to see is some sort of a trade and down and then close. Any type of close below this trend line is going to negate all of these points lining up all the way down the road. So one close will be a break of the trend line. So I think that's probably the biggest cautionary note to keep an eye on going forward here when we talk about the market in general. All righty. Boy, let's look at this histogram here on the AI. It's kind of like yesterday. We are entering the doldrums of summer, I'm afraid. Just not a lot of alpha in either direction, either for risk on or risk off. Today, a couple good trades, a couple bad trades, but there is one thing that I want to highlight. A couple of things actually, but the first is there was a couple of short sales that went off today. Now, I want to talk a little bit about the entries of short sales. Some of you regulars have maybe heard Andy and I speak about how we love a pullback entry on a long strategy versus a breakout and grab new highs from momentum. The pullbacks are always a bit more easier on the anxiety level if you can nail it correctly, and it gives you longer term confidence. So we had 2 shorts today that actually fired, 2 different strategies. No fear short here. Well, let's just go ahead and do this. Let me just bring up that so I can make my point. Yep. Okay. We'll come back to that as well. Also something, well, just let me show you that for now. On the Trade Ideas website, which is where I'm going to go, if you guys ever want to see the most updated AI, it's a popular question, well, how's the AI performing? What you guys need to do is just go to the bottom footer and in social media in blog. If you click on blog, David Afariat is out of town at the moment, but we have what's called the Holly Morning Huddle, and this was the last one a few days ago. If you click into any one of these Holly Morning Huddle blogs, it kind of gives you an idea of what's set up for the day, but you'll also have an updated 2017 performance, the blue line being the total points gained by the SPY, and the green line being total points gained by Holly AI in, I might add, risk off mode. So not a risk on mode, risk off, the most conservative mode of all. So if you guys are ever wondering how this graph looks, it's on the page right here for blogs, and just go ahead and find it. Well, since I'm at the bottom of the page here, there's something else I want to show you. For those that aren't aware, we spent some time putting together some thumbnail descriptions of our AI strategy. So I think that's a good lead-in to what I wanted to talk about here. So we click in, anything in red is going to be a short strategy, and anything in regular print is going to be a long strategy. So the first one we had was no fear short here. Well, let's read together, shall we? The trigger of this is locked or crossed market. The bid and the offer are the same. So it means that the offer and the bid are probably squeezed together, and more than likely the offer is trying to go below the bid. So there's a big push on the offer sell side. It's a short selling strategy that looks at the NASDAQ and the S&P market filters. So the reason that fired today is, if you'll recall, our markets were down this morning. The NASDAQ and the S&P were both negative on the day. So that's what we call a market filter. So it needs that to be intact, which we had. But here's the key: in a downward momentum to trigger a short selling opportunity. Okay, downward momentum basically means it's kind of like buying highs. On the short side, we're just selling new lows. Now, even though it tested well and came in today as a strategy, that strategy's been pretty tough in this type of market. When we hear buyers buying the dip, just buy the dip buyers here and there. And the short sellers have had a hard time really getting any momentum to last any significant amount of time to the downside. And this particular strategy is piling on momentum to the downside. So let's pull aside and take a look at a couple of those trades that did not work. Okay, so here is our 15-minute chart. And basically there was the entry, the blue line right there. And so we were just a tick off of lows for the most part after already selling off and gapping down. And then it didn't have any follow through. It was basically just kind of a non-event for the rest of the day. The other one, no fear short here in RMP. Oof, pretty tight range on this one if I can zoom in. Once again, there's the blue line. Looks like it traded up and then started to roll back down, but the entry to go short was, near the low end of this red candle, and there was zero follow through to the downside. So my point is that at some point, these momentum shorts, such as no fear short here, they're going to work, but it's probably going to be in a seller's market, in a bear market, something that we're not really used to seeing lately. So let's shift gears.
Wait, one more thing, Steve, and also this is just words of wisdom for the long side or the short side. If you pull up the daily on RMP, anytime you see a big move, gap down, and a huge drop like that on one day, it's very difficult to get the very next day to get that momentum going again. It's usually what we call an inside day, and in other words, it trades with inside the same candle. And you can see there it never went to yesterday's lows. That would be almost one I would wait for it to take out yesterday's lows at some point. And that's always and that works for the long side too. Anytime you see a huge upside momentum bar like that, just be cautious on the next day jumping in and trying to, it will work sometimes, but I'm telling you, me and Steve, we traded long enough to know 9 times out of 10 you're going to have an inside choppy day. And that's what you
think
got
about
there.
it. And that doesn't matter. I don't know if this was earnings or bad news or what happened. But here's a red candle, and then everybody comes home that's long this stock, and they're like, oh my God, what just happened? And so it takes literally a couple of days to wash out the negative sentiment before you've washed out all the weak hands. This could go just as well with a stock that had bad earnings. When I see people trying to buy stocks that had bad earnings the same day or even the next day, it's a bit early in our opinion. We used to have a rule when we traded the mirrored ditto trade account that we would at least try and wait 3 days after bad earnings to try and weed out the people that didn't really understand what happened, and the next second and third day you still got some straggling sellers. So after the third or fourth day after a bad earnings or a bad news event is usually when we start to feel like, okay, well maybe it's time to look for a bounce, but that's just a personal preference. It doesn't always mean it's the case. All right, let's go read another example, which is knocking on resistance, the other short. there it is, alphabetical, knocking on resistance. A short selling strategy that looks to fade the upward movement. That's completely different than piling on to the bid and trying to push momentum to the downside. It's the opposite of a pullback when you're buying a long stock on a pullback. Well, if you want to short a stock in this market, your best chances are probably doing a fade. You know, sell the rip, as they say. Buy the dip in a bull market and sell the rip in a bear market. I'm not saying we're in a bear market, but what I'm saying through my observations of Holly here is that downward momentum trades on the short side just aren't putting the score in that I'd like to see. However, fading stocks that push up, and that's where really the AI starts to come into its value point, is identifying those levels of where to jump in and fade the stock. So let's look here at a 15-minute chart. Here's our opening candle, a little bit of back and forth, and then right here, there's our blue line, and there's our candle, our arrow. As you'll notice now in the new versions, the arrow is now pointing down for our short sell, and here would be our stop loss. So let's just zoom out just a little bit. For whatever reason, probably a lot of congestion in here, the AI saw this movement moving higher and decided to jump in and fade and go the opposite direction. I wonder if that has any market filters.
Yeah, so R1.
Okay, yeah, I kind of pulled this over prematurely. And it's also doing stocks under $20, I believe, right? Stocks under $20.
Wait, no, oh, wait.
Why is it that one? Knocking
maybe
on resistance.
Maybe you read
because I'm reading knocking on resistance. I should be reading putting on the brakes, which is probably
okay.
the same thing, but for stocks over 20. Okay, here it is, stocks above 20. They're basically the same strategy, buying into a strong push upwards. The 30-minute relative weakness in the S&P is also considered, so there is a bit of a market filter there. Apologize for any confusion. Same strategy, basically just for stocks above $20. Some of our strategies break them down, stocks over 20 and stocks under 20. So yes, there was probably a market filter involved as well, and not too much pain really on this one, a little bit of push here, but then just a really nice rest of the day. So the point is, when these short strategies come through, I'm paying a lot more attention to the ones like putting on the brakes, or the other one that I just read, what did I call that, knocking on resistance, the ones that basically say, halt, this is enough going up. The trade ideas, AI technology is recognizing a lot of data at these levels that suggest a good point to jump in and fade and go short. So Holly basically took 10 cents out of it. Profit save was the exit reason. Now, if you recall, profit save is very similar to trailing stop. And so 10 cents was taken out. There was probably a bit of a wiggle there, and the AI said, we're not going to let this trade go negative. But for the rest of the day, it worked very well. And again, I firmly believe that these types of short selling strategies that jump in the way of upward movement and say, enough here, and then look for a turn, those are the short strategies that I've seen working a lot better lately on the AI. Not to say that if we turn into a bear market that some of these downward dogs and bond shorty and no fear short here, the momentum ones to the downsides, they'll have their day. It's just not yet. Anything you want to add?
No, I agree. I agree with you. I love the fading strategies, whether you know, looking for a bounce or, like you said, putting on the brakes or
knocking on resistance.
Knocking on resistance. And I think you're going to see these bullet and bearish momentum strategies work well when we get into a bear market. And you know, who knows what that's going to be? It is coming. Law of averages will tell you it's coming. Yeah, exactly.
It's been years. You know what's amazing? There's probably a lot of great traders who have cut their teeth for 4 years of experience, but all they've seen is a buy the dip market. And it's going to be an interesting scenario for those that have been around long enough, grizzled, like you and I and Jamie and Dan and Brad, that have seen a few market turns from bullish to bearish markets, and that's when people can get into trouble, when they don't recognize that what was once working is no longer working. That's going to be a big test for a lot of people. And hopefully when it happens, we'll be talking right about it here, right in the middle of these webinars, trying to really accentuate that. But still too early for that conversation.
Mm-hmm.
All right. Trade of the week, I believe, is next. Let me just double check my cheat sheet here. Where are we? Yeah, let's look at trade of the week. So last week, as you recall, we had X steel, and I marked up the chart to show the kind of what we're doing now with these gradients. And again, for those of you who are not aware and you're wondering, why the heck do I not have this gradient? Let me just take a quick second. We're working on version 4.141, which is a version for only the what do we call it? Development version.
Yes.
Development version. And so we try and do that for a week or two to see if there's any bugs. But what you'll notice is, and this is so worth saying, X was not a trade today in Holly, but now if you're noticing, no matter what you type in, boom, you're getting these gradients of suggested risk reward. So why is that important? Well, for the first time ever, Trade Ideas is now no longer just an output mechanism where we set some filters and we set some alerts and we wait to see what comes out of a top list, what comes out of an alert, what Holly the AI spits out. Now, for those of you that have your favorite type of stocks, we have the ability to do input, output. All right, CMG just kind of came through. That's not a great example because that one's kind of hard to see. Let me do something like, I don't know, Tesla. Let's see if we can get Tesla to come in. Okay, so what it's doing is it's taking the last price, 372.24, and using smart stop technology in addition to some new pretty cool whiz-bang behind-the-scenes technology added on top, we give ourselves or we're giving you, the user, a suggested downside risk management stop point, as well as an upside possible target. So there is our entry. No matter what stock I type in, and I know you guys don't have this on the version yet, and I'm not doing this to tease you, but it's coming, and it's a really good step in the right direction because now we've got some great ways for people to input their favorite stock and then have the AI technology, the machine learning technology tell us what might be the best way. So in this particular case, we look across over here, we see this is our downside there if we were to trade Google right now, if the market was open, and really the only upside kind of lines up right there with that base, and there's your risk reward bracket for Google. So it doesn't matter what stock you type in, you're going to have the ability to have a risk reward band showing and coming. Okay, bit of a sidestep there. That's coming, don't worry. It'll be here in a couple weeks for everybody. But what I was saying on X is what I was trying to show, the same kind of a thing, or risk and reward. So for X, it would basically touched both lines of our risk reward. So we're still here in the risk category. If it rolls back over and takes out 1975, then it's stopped out. So patience is a virtue. We'll see how it goes. We're just going to have to just leave this one as is and adhere to our risk reward, and those are our lines right there. So that was last week. Now this week we did something a little different. Normally, let me pull up the volume here. This is a stock ASPS that's average daily is 131,000 shares. Normally that's a little low on the scale, but I did put a caveat paragraph in there to remind people to keep an eye on the volume. And what's interesting to note is today was anemic volume on the heels of yesterday's about 240,000 shares, I think. So today did about 1/3 or maybe a little less than 1/3 of what the volume was yesterday on the upside. So I'm not happy about the pullback. I mean, we were in the money yesterday and we were in the money a bit today, but the pullback, the good news, is on light volume. Now, coming into this trade, this is kind of typically where we start. You know, it was on the trend change lubricant going into the weekend. It's not there at the moment because it pulled back a little bit, but what we're seeing is a short float of 67% on a stock here that's making money. Earnings date are far down the road, so we're good there. The float is only 18 million. Anything under 20 million float with a high short float percentage, which is exactly what this, is a great recipe to take a chance on for a short squeeze. I mean, this was right at the top of my top list because the short float was so high, and also the size of the circulation of the shares out there are very, very low. And yesterday, I would have loved to have seen a push higher. Matter of fact, I've got a couple more slides for you. This was yesterday as the stock triggered and moved higher, and I had mentioned I really wanted to see some good 5-minute volume. Our relative volume was above 1. I would like to have seen that higher, but as it was pushing through the trigger point, the 5-minute volume was at 533%. That's what I always want to see as the stock is making highs, especially pushing through interesting levels. And then later in the same day, we had some nice consolidation, back here consolidation, and then as it started to move back through there and creep higher, 5-minute volume was at 1200. So I didn't see any of these type of values today on the downside. I only saw those values yesterday on the upside as ASPS was moving higher. So again, patience is going to be a virtue, just like I did with the X chart. I basically gave risk reward. This is our risk band down here. Our reward band is right here, and I even put a little smaller margin above it. So this we could kind of call this R1 and R2. If we can get up to there, it would be a decent trade. But what we need is for the short sellers to freak out, and I kind of thought we'd get that yesterday as we traded through that high, but the stock kind of fell asleep and came back down into the range. So hopefully we'll get another shot at pushing back through highs on good volume. And if the short sellers have any sense about them, there's 67%, 2/3, in other words, 2/3 of an 18 million share float, which is extremely small, is being held by short sellers. And that's the kind of thing that could just give a wonderful 1 or 2 day type short squeeze. Would have loved to have seen that happen yesterday, but it didn't. I don't know how much of today's negativity in the market had to do with that. But again, the good news is on ASPS, the pullback was on very light volume compared to pushing through resistance yesterday on those volumes. All right. Let's see. Anything you want to add? Yeah.
Sure. Yeah, I'd like to say, I mean, we put these out pretty much every week. Every now and then, we will kind of pull back and just say, it's just too nasty, too volatile right now. And when you get back to the chart pattern like we're seeing right now with the chutes and ladder, and you did have that huge sell-off day in the NASDAQ, don't feel like you have to make. These are ideas. We're always presenting ideas, and the trade of the week should be considered an idea. And it's up to you as a trader to use your common sense. Exactly. And not only that, there's no trade that just acts in a vacuum. There's so many variables that can affect that trade. The overall market, the peers, I talk about this all the time. So don't feel like everything's etched in stone. Okay, this is my buy, this is my stop. I'm not doing anything until this stop hits. You can't do that. I mean, sometimes you have to manage risk, and a lot of times when I get an environment like this, and it's like Jesse Livermore said, he didn't make his millions trading, he did it sitting on his hands. And I promise you, this probably might be an area where he's sitting on his hands, because we're real not sure about the direction right now, it's looking kind of toppy, so you got to be careful, and use your own judgment and manage your own risk.
Yeah, we don't have a crystal ball, but we've got some great ideas for some concepts of setups, and that's why I always end the Trade of the Week email with use enough shares that if we do happen to get stopped out, it does not exceed your maximum loss, and that's just a basic function of risk management. Let's just say, for instance, yesterday ASPS took off and was going, and maybe you got some off and everything was looking great, and then we wake up today and an hour into the market we find out that we're in the middle of bombing North Korea, right? That is a significant change, and it's up to you to manage risk based on the changes in the development as we go forward, because we don't have a crystal ball. We don't know when the next macro event's going to happen. We don't know what the next thing is going to come out of the Fed's mouth. Speaking of the Fed, they probably are having such a hard time right now. They want inflation to get up so badly, but they can't, You get Amazon out there buying Whole Foods, driving the price of food down. We're getting food deflation. You look at the oil prices. We got energy deflation. But I digress. Just kind of a thought I wanted to share with people. The Fed really wants inflation, but they are not getting it. Not getting it at all. All right, so let's spend a few minutes. Again, for those of you last week that came with us down sector lane, we took a couple of look at a few of the sectors and tried to identify which ones were looking strong. And if you recall, XLV, healthcare was one of them, and had a real nice couple days. Or back 1, 2, 3, 4, 5. Had a real nice week. This was back here when we call it out XLV. So let's see if we can find a couple other interesting sectors simply by just double-clicking and going through. Now I know right off the bat this one's going to look good. Today the biotechs had a nice day, and as we look at the bigger picture, they really had a nice day, and they broke out of a prior range. Let me just draw that range right there on the top. There it is. So poked through, broke out. This is probably going to be an interesting level to keep an eye on there for the biotechs, the IBB sector. So I think this one definitely goes into the short list. If you go back even farther, we can see that we've been kind of mired in this range for a while. And we did, in fact, barely close above it. So, I mean, we're right there knocking on the door. These 2 days were a couple of big moves. It might need a day or two of consolidation. In a perfect world, maybe some sideways consolidation right along the side of that line there, and biotechs showing some strength. Treasury bonds, well, interesting. You know, Treasury is not really something you trade. It's more of a macro type environment, but it seems like people are buying Treasury bonds. If we zoom out a little bit, we do have a gap there that looks like it's came right up to, as a matter of fact. So that is kind of interesting in itself, a big void. I don't know really what to make of that. You know, talk about a pivot point, support, resistance. So keep our eye on the Treasury bonds. We might start hearing some more about those. Here's our champion XLV following through from the strength we identified last week. UNG, ugly. Again, deflationary prices in energy. SLV, rough couple weeks, but it did put in a little bit of a hammer candle here. But, you know, these ones are tough to play, SLV, really GLD, because you can wake up one morning and be completely slave to the overnight market where the real moves happen. So, you know, holding SLV and GLD overnight can be a tough one. Gold miners, well, I can see a bit of a trend line trying to develop here, but, oops. Nothing to write home about on the chart necessarily. Diamonds, we've seen what those look like. Gold, similar to silver, they're going to have their gaps all over. Almost looks like a foreign stock. So far, just to rehash, not bad in the biotechs and the healthcare, and perhaps Treasury. Let's get down here. Home builders were one that we were watching last week. 1, 2, 3, 4, 5. So last week, this was our candle on the home builders. They did go through highs, pulled back, and then went even higher. So they're still probably on the radar. I would probably keep an eye on this line that was drawn last time. If we come back down and close, actually, I'm gonna modify that just a little bit. I'm gonna modify that down to about here. We'll just call this a safety range, but if we come back down and close below that high and give back this bottoming tail, the home builders might start to come into pressure. Solars, TAN, well, this is kind of interesting. Perhaps maybe a kind of a cup and handle beginning to form, but I think the real interesting part would be a move above that level going back there. So still a little bit of work to do, but if the solar TAN can take out that level in the bigger picture, not only have we broken a downtrend, but we've taken out a prior high. So maybe keep that one on a semi-short list. SPY, we did that. XLF was on our short list last week. Well, 1, 2, 3, 4, 5, it had a nice move, and what it's doing is it's not giving anything back in price. It's basically just going sideways. So sideways is better than pulling back in price, but what I may consider doing is actually putting in a price alert right here. What's the high of that candle? So 2460 is what I'm going to want. I'm going to right-click, price alert, adjust to 2460, let myself XLF, new push, higher out of that consolidation. So if that does go off, I'm probably going to quickly start looking at banks and financials and see what's going on if I get that bigger picture alert. Cues we've looked at, so chutes and ladders still haven't really settled in. XLK is going to be the same, your technology index. IWM, we've talked about that, just a big mess right back in no man's land, nothing really to write home about. This one we did mention last week was starting to look interesting, the agriculture ETF, the MOO, but big red candle today dropping back down into the range. So not seeing anything there. Did I skip IYR?
I think you may have, yeah.
I did, didn't I? Where is IYR? Thank you. IYR. Hey, and that was not a bad one to skip. Thank you, W. Commercial real estate. Well, what do we see here? We see kind of a slow higher highs. We took out those levels back there. And really nice close. This thing could have closed weak with everything else that was out there today, but the buyers came back in yesterday, the day before that, the day before that. So there seems to be some buoyancy in IYR. I'm not going to give that a bad rating, but look for a possible push higher. Probably wouldn't even be a bad idea to set another price alert right there on the IYR breakout if it does want to do so. And we could keep an eye on REITs and commercial real estate. Semis are going to be probably just like, yep, just like the Qs. And then we got our banks, local and regional banks giving a little bit back after a nice financial push. So ideally, maybe some of these banks might start to dig in here. Both of those look very much similar. Yeah, you'd probably like to see those dig in no more than that on each case. They're both very similar. Kind of where, guess what? Where the trade ideas is putting in the current risk-reward ratio on our new charts. Definitely a reason for that level right there. China, you know, China stocks are China stocks, but the ETF shows the story. Gap up or gap down every day. Energy. Okay, well, this is kind of interesting. We took out a long list of lows here going back all the way back here, and we did it with kind of a bottoming candle. Energy could be worth watching, but it's just been so beat up. Just that's a trend that is just poster child for higher lower highs and higher lows, lower lows. So nothing really to write home about on that. Maybe it can build on this bottoming candle, we'll see. But we're getting down into the bottom barrel here. Transportation was doing well, but gave a lot back today and closed on lows. Not really excited about that. That was transportation. Steel, which is going to be, you know, it's a function of our X trade, not looking healthy. You know, when the trade was called, you know, this bar had come into play, and now this luster is starting to fall off the general steel sector. So that's definitely something to take note of. And of course, retail was just decimated by the news of Amazon buying Whole Foods, and a lot of retail did not, especially the grocers, did not like that. And finally, typical oil services and oil energy. So, ugly. So the short list of things I think we like are biotech, healthcare still, and for whatever reason, treasuries. Now, if the institutions start buying the hell out of treasuries and selling stock, you know, that could be kind of a hint at a bigger market macro event. You know, we'll see, but I don't know what to make of the TLT right there. So not a lot of sectors really jumping out as being perfectly set up. Still some work to go, especially in those technology names. All right, guys, so we've got 7 or 8 minutes. Omar, John Jr. was first with OMER. He wants to look at a chart. So we'll take a look at a few charts. All right. OMER, 1, 2, 3, 4, 5, 6, 7, 8 lovely days of upward movement with a nice, I'm going to call it kind of a blow-off candle here. I would not be buying this chart. What I might consider doing is maybe looking for some sort of a pullback. Where can we look in the history, oops, for a possible pullback on this thing? Well, that level right there going way back looked kind of interesting because there was resistance. Let's zoom in and see where that does. Yeah, a little bit of congestion and choppiness here. So, you know, again, I'm not one to come in and buy a stock that's moved that far and spent that much energy that quickly. I'd rather miss the trade than chase a trade. But looking left, like we always talk about, definitely a reason for a possible pivot point there. So what I would consider doing, and I'll do it right now with you, is we've got to change this. I did a right-click price alert. I don't want to go short. I want to use it as a pullback. So we're going to code it as a long, and then I'm going to tell myself what I always do. Pullback, watch price action closely. And that's all I really need to tell myself on a pullback. Pullbacks can overshoot and then pop back up and find a bidder. So that's what I see on Omar. You see anything else or different?
Yeah, I see the same thing. A very extended, but a very powerful move. It, not only is it extended, but it did it on huge volume, pretty much all every day. So it's not one that I want to try to pick a top and short. But Steve's right. Maybe you look, if you're interested in something like that, you look for a pullback and you mark, and you put a price alert in there, and forget about it, and wait till all of a sudden you're not paying any attention, and it flashes for you and it just presents it on a silver platter for you.
Set it and forget it is what I like to say.
Exactly. Yep, there you go.
Okay, the next one is AAOI. You know, definitely a pivot level going on here at these levels. Prior resistance became current support on these 2 days. This day. Yes, we traded below, but we don't count where it traded. We count where it closed. So it closed back above. I don't know if you're long or short, Alan, but I would be watching this level here, probably the round $60 level seems to be a real pivot level, 60.19, 60.10. So give or take 25 cents above 60 bucks. That's the level that this thing is going to have to hold. Got caught up a little bit with the market today, threw in a red candle, but that's the way I would look at this.
Going back to the low in April, you got a trend line that it bounced off of, 3 days ago? So I would watch that level. So you got a nice kind of defined trend line there. Okay. I love trend lines when I'm you know, swing trading or position trading. I like to, you know, so maybe if it comes down and tries that trend line there, I don't know, Steve.
He's long, so I want to go ahead and put the trend line in there. So that can be for somebody who's long. That can be your way to manage risk.
Exactly. So you got a nice little trend right there.
You know, for the most part, there's your trend line. Look how it's corresponding almost directly with the pivot line as well. So I would hate to see it close below 60.
Right.
Alan. All right. MAA, real estate sector. And zoom out, he says. Aha. This is the most I can zoom out right there. Let me put my crosshairs back on and pop this line in here. So we can see that we made it right back up to this level, and we are congesting at this level. But the good news is we're not giving back in price. And the actual candle here today shows an attempt to pull back in price, but the buyers stepped back in. Would have been a perfect pullback if it had filled that gap. So that's still there on the negative side. But the nice pullback and buying at the close on the wick there, you know, 4 or 5 days of sideways action with one of the days going down and sucking right back up with the bottoming tail. Nothing wrong with that. So this is all considered, you know, congestion and working off some energy and trying to rebuild some new energy. Just be aware that, and it could happen on the open where you have a big run back down and to try and fill this gap, but I would probably not want to see it trade below the high of this gap here, 108.16. About the same thing you're seeing there, Andy?
Well, I am, but if you go back to the high in July of last year, that's what it's grappling with right now. So you would like to see that, I'd like to see it stay above that high, you know, because...
Which is 110, basically.
Yeah, yeah. So, yeah, a failure there, you know, and it could be, you know, sellers may, because, yeah, they're looking at the technicals and they may be bailing, so be careful. I'd like to see it hold that high, get above that 110 and stay there.
Yep. All right. So that's it. Good time to turn it over to Scott. Thanks for some of the questions. I know some of you people came in late. We will have a video replay of today's webinar. Probably won't be for a few hours, but check the available from Mac platform. What I do want to say is that the stock networking, Mac never had a foothold in Wall Street. So the entire network of Wall Street is not built on Mac, so it makes it kind of tough. We use some crossovers or parallels, but as far as I did want to remind people that do have Macs, it's nothing against Mac. It's just that Wall Street was built and predicated on the foundation of Microsoft network technology.
Yeah.
Okay. All right. Hey, Scott.
Hey, yeah, thank you. About Mac, yeah, we're probably never going to have a native Mac version. However, the web version is becoming closer and closer to the desktop client version, which is what our goal for the web version is going to be. It currently has almost all the functionality of the download version except for AI and a couple of advanced features. However, if you use crossovers to install Trade Ideas Windows download on Mac, that works really well, and you can contact customer support to find out how to do that. We've got discounts available for using crossover. There's also, of course, running it in an emulator like Parallels or VMware, but some people don't want to do that, or dual boot. Don't feel bad about using a Mac. Our CTO, who is the chief architect of our software, develops exclusively on a Mac, and he runs it in an emulator. Has been doing that for years and years. So do our other employees that use Macs. It's just probably never going to have a native download version. There's a lot of technical reasons that it's hard to support both types at the same time and achieve rapid development like we do. So that's why the web version being on par with the download version makes a lot more sense, and that's where we're pushing. All right, thanks. So yeah, we have a podcast that comes out every Friday. We're going to have a special guest this Friday and next Friday. Find out who that is a little bit closer to the date. Just search for Trade Ideas Podcast in your favorite podcast application and add us as a subscription. So you get those new fresh episodes. There's a new one last week. You should subscribe to it now and download last week's and hear that one, and then you're ready to hear the new one as soon as it hits the internet, usually about an hour after the close on Fridays. We have a code for you. The code is good this month. It's Sunny, all caps. We are case sensitive with the promo codes, but that saves you 15% off your first month or year of premium or standard Trade Ideas. And like I've mentioned, that works on both standard and premium. So even if you're just picking up the $99 a month entry level standard subscription using that code with the discount, you still get a full hour of one-on-one training with either Steve or Andy or Jamie. So remember, all of our subscription levels include a full hour of training, and it's something you should do after you have checked out some of our Getting Started videos, attended some of our webinars in the trading room. Get a good idea of what questions you want to ask and what you want to cover during that training session, and it is the best way to get started. So you can also download some of these slides and our code at the handouts panel. Just expand where it says handouts on your GoToWebinar interface, and you can click that blue link and download the PDF. If you have any questions, email us info@trade-ideas, and that is our help desk email. It goes into our help desk software, which we can route to the appropriate team member. You can also reach out to Steve or Andy directly, Steve at or Andy at, and you can follow Steve at Today Trader on Twitter, Dan Merkins at Trade Ideas 1. Facebook.com/Trade Ideas Pros, where we are on Facebook. So if you follow our page there and like our page, then you'll see our content that we post there, and we post some different content there, so you can check that out and share that content with your friends. Thanks, everyone. Have a good evening, and the recording will be up a little bit later tonight. You will get an email reminder from GoToWebinar with a link to the playlist where we archive these, so you can watch it. All right. Thanks, everyone. We have a special guest webinar tomorrow for Who Trades. It's one of our partners and that we work with. So it'll be interesting to see. I think they're launching a new part of their platform that people can actually monetize their strategies off of. So it might be kind of interesting to check out. You're going to get an invitation for that tonight. I recommend subscribing, signing up for the webinar tomorrow and checking it out, and maybe it'll be something of interest to you. Anyways, I'll be interested in the feedback from that. Thanks, Steve and Andy. Have a good one.
Thanks, Scott. Thanks, Steve.
Great.
Thanks, everybody.
See you next time.